Natural gas yielded a bearish candle last week. It has dropped towards 3.16 levels and closed below the critical resistance at 3.2. Yes, it is still very much above the support line at 3.05, 3.02 zone, which was the breakout levels. Yes, we have last week that the prices were outside Bollinger Bands, and also this was the reversal sign, and after that we have seen the first red candle. So can we expect it to continue with the second red and move towards $3 levels and bounce back from there, or is it going to reverse from here itself? Considering this as a retracement, which position you should take, we will see with the help of charts first, followed with indicators, and towards the end, I will give you the trading levels, strategy, and summary for next week. Do watch till the end. If you think that the content is adding value to your analysis, do press the like button, do share, subscribe, and comment. And join my free Telegram channel for daily live updates on major global markets and commodities. The link is mentioned in the channel and video description. Let's have a look at the weekly charts. On the weekly chart, see this was the breakout here. After the breakout, we have seen price rallying towards 3.6, and now it is trying to retrace a little. Now retracement means this is definitely a support zone which it is looking forward to at around 3.02, 3.05 zone. Very strong support exists at around these levels. It can try to achieve these levels, and as long as these levels are respected, I will expect a reversal in crude natural gas. So right now the prices are still appearing to be slight bearish. It can try to move a little down before looking forward to a pullback. A pullback is what I will definitely look forward to. But if you look at the moment, see prices closed below the 3.2 levels, and it is closed at bottom with a slight tail wick on the downside, you can say tail on the downside, and hence if it stays below 3.15, we can again sell. Expect 3.1 as the first target, 3.05 as the next, and 3.02. Now 3.02, 3.05, very good supports are there. Also, if you just connect the dots, you'll find that here is the maximum support for natural gas. Achieving those levels, it can reverse, it can bounce back. The possibility is very strong. Coming to the daily. Now, if you look at the daily chart, see this was the wall which was created at 3.6. After creating the resistance at 3.6, we have seen net gas staying in this bearish channel. Also, if you look at the last two candles, see the last trading session's candle was a bearish candle, but with a very small body size. This suggests that yes, the bearishness is there, but still it is getting a lot much of resistance on the downside. And now, see this candle could be a reversal sign if the next candle stays above 3.25 levels here. Yes, 3.25, 3.3 levels. If it breaks past by, consider this for a reversal, and a complete reversal is only if the price stays above 3.4. This could be the reversal signs on the daily charts if the prices stays first 3.3 levels and then 3.34 levels. If these two levels are breached, we can expect price to rally. Likewise, on the daily chart, see this was the breakout here, and post breakout we have seen a massive rally. This is first retracement here post the rally, and yes, it can reverse and achieve higher highs. Why? See there is still lot much of up move left in net gas, but it is trying to retrace that it was trading slightly overbought earlier. And hence we have to be cautious, we have to be watchful at around 3.0205 levels. If the prices move towards this zone, the possibility of a reversal will be very high. At the same time, 2.9 and 2.8, this is also two support levels, and hence this zone should not be breached in any cost here. Yes, 2.8, 2.9 zone should not be breached in any case. If it breaches below 2.8, 2.9, certainly you can say that the time has come for the gas to crash. However, I do not think this happening. I do not see this happening in any point of time in near future. Now let's have a look at the monthly. Likewise, on the monthly charts, I have always been bullish on net gas since last 4 to 5 months. Those who follow me had watched me saying this, that stay long in net gas, first at around 2.0601, 2.1 levels, then at 2.48, 2.5 levels, and then 3.02, 3.05 levels. Yes, I have always maintained a bullish stance here. And now again, if you look at the price, see on the monthly chart, this is the first breakout, and net gas is certainly not willing to close this candle in red. That will be my expectation here, that it will not try to erase all the gains and move on the downside. This is the first expectation, and probably it might not. At the same time, we should see that yes, it has erased most of the gains for the month. It can probably reverse again, close the month at around 3.4, 3.5. That will be the target here. Now if you look at the movement here on the charts, see this candle here, major move was seen here, and there is a gap left at 4.3, 4.4 levels. Also, if you trace the movement here after the drop, this is still in the retracement zone. So can it probably go down further? This probability will look with the help of indicators. Right now on the candles, it appears that we are going to see a bullish move again. Now let's see with the help of indicators what does the indicators are suggesting. If you look at the indicators on the monthly, you will find the divergence of the price on from the moving averages, which are right now sitting at around 3.7, 3.8 zone. See, also you should note that the 50 and 20 months average have crossed over here, and this has happened after a long stay above the bullish zone. And this crossover has certainly means a lot on the monthly charts. But yes, one must also remember that the prices are still divergent from the moving average, and yes, it may try to converge towards this zone at 3.7, 3.8 some point of time very soon, and then also try to fill the gap. But right now it is showing a pullback, maybe waiting for the next month's candle to gear up for the launch here. That is the first part to it. Stochastic on the monthly charts have come back towards near to overbought levels. It is not yet overbought. While look at the MACD here. See, MACD was trading with the bearish bias and now it is trying to converge. Also, if you look at the MACD, these lower levels are the levels from where the net gas has always bounced back. And on the monthly charts, this is only since last 15 years, only the financial crisis has seen it dipping, else it was very much staying above this zone. And yet, this time again, a possible crossover may bring bullishness for the next few months. Right now, it is trying to stay away from a crossover. RSI is staying flat here. Coming to the week, on the weekly chart, the price has stayed outside Bollinger Bands, and that is why we can see a pullback here. Yes, it can show further pullback. It can show further retracement towards the 20 months average. Also, one must note that the moving averages have now started to converge. You can look at, see, it has formed a base and it is trying to converge here. Possibility of a crossover in next few weeks exists, but it has to show extreme bullish momentum for that. Moving, if you look at Bollinger Bands have diverged, this is also a good sign. If you look at the stochastic, this was slightly overbought, and that is why we can see a red candle here. Yes, it can also show another red candle before looking forward to an up move. The MACD is staying bullish, staying divergent, and it has still further scope for it to continue on the upside and show a V-shaped recovery. Right now, this candle is just trying to converge a bit as it has stayed consistently bullish. Yes, there is further scope for it to continue on the upside, but at the same time, we must note and a crossover here can bring further bearishness, forming double bottom. It can bounce back. Hence, it is taking its time for it to continue on the upside. RSI looking down on the weekly charts. Coming to the daily charts. Now, on the daily charts, this is what I had mentioned last week that yes, the prices are too much divergent from the moving average. It must converge towards the moving average. It has converged here. Now, a reversal can be expected from here. There is a strong probability that on the daily charts, but only one thing I will be waiting for, that if it tries to hit the bottom here before looking forward to a pullback. That is the only point which I'll be waiting, but it is still trading in this bullish channel. That is very clear that prices are still very much in the bullish channel, and I do not see it breaking this zone anytime soon. If it does, certainly little more bearishness towards 3 and 2.9, 2.8, but still, it is still to be treated as bullish. That will be my expectation. Stochastic oversold. Now, this is why again the MACD has crossed over here at the top at C plus 200 plus 150 levels, and that is why we can see it trading with divergence and bearishness, and we have seen further bearish candles here. Now, achieving the lows, there should be a pullback, or there can be a pullback. Yes, it is not that it cannot achieve further highs here, but yes, see, the bottom also was far below, and hence it has further scope, but right now it is trying to consolidate a bit. It is trying to converge a bit, not converge, but retrace a bit on the downside. And achieving these levels, there should be a reversal. So a slight bearishness further can be expected in net gas, but still I will say 3.05, 3.02 zone should be a very good support. RSI looking downwards, trying to stay bearish. Let's also have a look at the 4-hour. On the 4-hour chart, see the moving average is crossing over here. Thus, this makes this zone here at 3.28, 3.35 as a greater resistance, and ultimately 3.4 as the strongest one. Also, if you look at it is trading in this bearish channel, the last 3 candles have shown higher highs. This is making me a bit cautious. And see the stochastic at bottom, the MACD is bearish here, and the RSI is also sitting at bottom. So now we have seen the charts, we have seen the time for me to define the trading levels and strategy for you all, so that you can trade profitably net gas next week. And before we proceed, if you want to learn this art of trading which can help you identify profitable trades and trade profitably. You can join my mentorship batch. The 26th batch is going to start, is already started on 16th of October. 27th batch is now going to start on 20th of November. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. With that, let's start. And also, if you appreciate the effort, do press the like button, do share, subscribe, and comment, friends. This has always been a great motivation for me. So now I will recommend you to buy the net gas here at 3.2 levels. Beyond this, you can expect, see, very nearby, but 3.22 is the first target, 3.28 as the next target, and then 3.3. Now this zone is going to remain the first resistance zone here at 3.28, 3.3. Beyond this, you can look forward to 3.33, and then if it stays beyond 3.35, that is the next, we can directly look for 3.4. Now this is the next level beyond which the complete reversal should be expected. If it stays above 3.4, certainly you can say that the bulls are taking over here, and it may try to again aspire to achieve 3.5, and this time the next target is directly going to be 3.7, 3.8. But this is not going to happen this month, probably the next 7 trading sessions. I think it is going to either consolidate or try to achieve further lows before looking forward to a reversal. Thus, on the downside, where we can expect it to bounce, first thing is we have to ensure that we are also taking the ride on the downside and not missing out the sell entry here. You can sell here at 3.16, expect 3.14, 3.1. Now 3.1 is going to be the major support levels here. Below 3.1, direct entry to 3.05, 3.02. Now these two levels are critical for net gas. I see this as a great support. And yes, $3 levels, in fact let me include 3 also. These levels are going to be the prime support levels. Any point of time achieving these levels, it can bounce back. I do see 3.1 also as a great support. Even if it has to bounce back, it can try to achieve these levels before looking forward to a reversal. Now below 3 is where the bears will try to take over for 2.9 and 2.8. Two major support levels. I do not see net gas coming to these levels, but yes, these are the levels which you should look out for. If gas tries to achieve those levels, possibility of a reversal will also increase. Hence, take your trades accordingly. Trade with a stop loss and a trailing stop loss. Do watch the daily analysis as well. That will definitely add to your day trading decisions. Do not miss out on the same. Thank you very much. Have a great profitable trading week ahead. Thank you. Do press the like, share, subscribe button. Thank you.